Hi everybody, this is Gary Dean and this is our nightly video report for Wednesday, January 13th, 2016. Really didn't see this coming today. What I'm going to show you, it kind of makes sense. I just didn't really see it happening this soon. But in any case, I'm going to go through it, and like I sent out in the morning notes, I'm going to be switching over to the SDS and the SSO, which are the two-time S&P leveraged ETFs, and really the main reason is it's just a lot easier to manage on my end, and you can still trade options off of the calls. I mean, obviously, if you missed my last call, you'd be happy because I'm getting crushed on those. But anyway, my main reason is, if you go to where we got in. The first one, the S&P was at 1960. Second one was at 1926, and you average it in, and it was around 1940 in that range. It would be the average price. And yesterday, even today, the S&P was at 1950. It's a lot easier to put a stop in place using those ETFs, because if anything, you're down a couple dollars and say, okay, risk a few hundred and that's it. But with the options, if you're not perfect on the time, there's nothing you really can do except sit there and watch. So I'm making a switch more for I think I'll just be able to manage the markets better. Like I said, if you guys can you can trade options off of it. I definitely use more time on it. This market definitely threw me for a little bit of a loop today. I was expecting somewhat of a pullback. I didn't really expect the entire move off of the lows on Monday to be wiped out and some. So let me get started. This is the S&P on a daily chart. Again, no need to keep showing you. Each time we've been down at these levels, we've had big bounces. Here's a support line. So if remember that those, let me just do this. Okay, so we know that they're here, and it's each time that we've hit down here. So we have we're at this trend line that it's been, when we've been here, we've had big bounces. So of course, I thought that it was going to be a little bit, we were going to get the bounce before, but obviously I was wrong on that. And as I've said, it's it's the stock market. You're not going to be right 100% of the time. It's just, you're not even going to be, if you're right 80% of the time, it's good. But I don't like being wrong. I can't stand it. With my own personal account, I can deal with that stuff. But when I'm passing on information that I know some people are following, no, it hurts me, and I don't like it at all. So that's, again, one of the reasons why I'm looking to switch over to something that's not going to get killed on time, where if you're, even though I might be looking in the right direction, if it doesn't happen within those, the time period that I'm saying, you're still going to lose. But in any case, so we're at a support line, very over sold here. Every time we've been here, we've had big bounces. Is it going to happen? It would make sense. How high? This is, what we want to look at. So we're in the support zone. The first resistance is back up to this 1952 level where we just were. If it breaks above it, then I believe we're going to be, coming back up to the 1944 or closing the gap at this somewhere at the 2012 area. So, and there's also a gap up here. But in any case, we're at support. 1, 2, 3, 4, 5. We have bullish divergences in place. We're at support. So typically, when we have the 5 waves down, you're going to get some kind of retracement. If we look at a 15-minute chart, this is the same thing. 1, 2, 3, 4, 5. So it's the same count. It's going to be a 50%, 62, 78% retracement is typical retracements after 5 waves. So again, it would be looking for a move to come to 1983 all the way up to 2040. And being that this move right here off of these lows at 2000 just made it to the 23% retracement, that gives you more, say, belief that this was just a simple wave 4, and this was the wave 5 down. So is this the low? Well, let's go to a 5-minute chart. And this is, this is that wave 4 that I was showing you. So now you count 5 waves down from here. 1, 2, 3, 4. Maybe we get another opening low tomorrow below this, but this would be your wave 5. So this would be, if looking at everything, your wave 5 of 5. And again, what it would imply, again, it doesn't mean it has to happen like this. We're just trying to, take a good educated guess, would be that we're going to get a bounce that's going to bring us someplace into these levels here. So that's pretty much it. I'm pretty confident that the options that I have that expire on Friday are going to end up worthless. Like I said, not fun, but it happens, and I'm never happy when that does take place like that. So anyway, let's see what plays out tomorrow. I'd still be very careful shorting this market right here. As much as I was saying that we're going to get a big short covering rally, this definitely was not it. When it does happen, I'm anticipating that it's going to look, more something like this, and this definitely wasn't it. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.